Good morning, everyone, and welcome to the European crossover webinar. And we just got the Eurozone PMI coming in at 44.5. Reuters poll was for 44.7, so just a tad bit weaker. We did get German Manufacturing Pmi, which came in at 45.4, French at 43.2, a little bit better than was expected for French, and Italian was 40.3. They're looking for 40.5. And Spanish Manufacturing Pmi came in at 45.7, a little bit better than it was expected. Later on, we do have UK Manufacturing Pmi at the bottom of the hour. Eurozone unemployment rate, which is going to be at the top of this next hour. And then coming into the States, we do have ADP at 8:15 Eastern. They're expecting negative 150K. Canadian manufacturing PMIs due at 9:30 Eastern, with final reading for market manufacturing PMI here in the States at 9:45 Eastern, with ISM PMI at 10 a.m. Eastern. We have seen the euro continue to weaken after that, big run up we had on Monday, and we've gone in, paired back. Actually, it was on Friday that we just saw this market really scream back, and the dollar's kind of edged its way up. Yesterday, we got up as high as 100 or nearly 100, about a couple of ticks from that. And Aussie, after a little run up in here, you can see we had actually a little gravestone doji here. From there, we went and paired back. Equities have really paired back. We'll go on and just take a quick overview on that. After what was quite the run, look how much we've come off. And we actually came right here into support here at 24.76. And saw a decent, okay bounce when it came on here. I'd only been up for a little bit, but we'd actually, this was 50% of this range, short-term range in here, and that's where we ran out of gas at 25.11.50. I think we kind of notched it up just a little bit higher. You can see right there. And 25.11.50, see right there. Right there, 11.25. I'm not sure why that did not pop up in here. Hang on, let me take a look. Okay, yeah, it did. Okay, that's what I was a little bit concerned. I'm thinking, wait a minute, did I lose some data? So you can see we went right to that 50%. You see that right here? 50%. Market finally stretched up in here, and then we saw a pretty good sell. I caught a little bit, but I jumped out way too early. I was a little bit concerned with the NAS because the NAS still was a little ways away from its VWAP, and I thought it might, and potentially I thought we might even make it up to 25.18. So we were kind of hanging around here at this 25, after we paired back around this 25.09, 08, 08, pop up a little bit higher. I thought maybe we'll make one more run up in here, then I'll add. But we finally did break a little bit lower, but then we went even much lower here. A little bit of support here. Actually extended beyond that because initially we had some support coming in here around 94. We kind of bounced around here, and then look how much further we've gone and dipped back. We've really come off quite a bit, and I just quickly set up the little zones here. And you can see how this thing has rotated. When we made it up to the 25.12, I thought we might be able to push even a little bit higher. Saw a nice little zone. I thought if the NAS would push up, I thought we would run out of gas in around that 25.18 and be willing to add on. But the market was really hanging on from here. Although we were seeing some decent volume, I thought maybe we'll get one more last push, but that's probably a little bit more. Probably may have been a little bit too much to expect, considering we just rallied back to the 50%. So probably, not probably, but did exit out of that short too early. Pretty good sell-off we saw here in the NAS too. Look at that. Gold has rebounded a bit here, and we'll take a look at that. Remember how dead gold was yesterday, and then we quickly fell apart. And but boy, we've really been scooting along. You can see here how they have been holding here at VWAP. And from there, this market's turned a little bit higher. We can see here the runs here in the NASDAQ, and here's what I was referring to earlier with the VWAP. I thought we were a little bit stretched above this, but I thought, well, they may spike it up real here to VWAP, and that might get the spooks to spike up to about 25.18, but it was not the case, and probably should have just tried to ride that thing a little bit longer. Certainly jumped out of that spruce short too early. Right now, we're kind of just bouncing around here, kind of all, I wouldn't say all over the place, but we've really come off quite a bit in the spooks after that 50% rally. And crude is still relatively weak. We'll take a quick poke over there. Still relatively quiet here, if you look at it. But we did happen to dip sub 20, so another rally back up here, and then we're kind of pairing back a bit. We'll actually have a story on crude, and we'll get to that. With that, let's go on and move into back to FX and move into the news. And then we'll go on to our analysis. So the dollar firms as investors brace for a global downturn. The dollar was a touch firmer on Wednesday, buoyed by its safe haven status with the world staring at what is likely to be one of the worst economic contractions for decades as it looks down to fight the coronavirus pandemic. It advanced against the Aussie and New Zealand dollars, the euro, yen, Swiss franc, pound, and Asian trade, but not much as appetite for the safety of cash dollars was offset by aggressive liquidity measures from the U.S. Federal Reserve. The Aussie dipped 0.2 and the New Zealand dollar dropped 0.3. However, that still left the dollar beneath the overnight highs against most majors and well below multi-year peaks made last month before the Feds pumped more dollars into the system to calm markets. The Fed on Tuesday broadened the ability of dozens of foreign central banks to access dollars during the coronavirus crisis by allowing them to exchange their holdings of U.S. Treasury securities for overnight dollar loans. The whole experience is testing the maxim in the market of don't fight the Fed, said Kyle Rhoda. The Fed clearly wants to do everything it can necessary to ensure dollar liquidity, which puts downward pressure on the dollar, he said. But by the same token, there is still a very structural push to buy dollars right now because liquidity is coming at an absolute premium with so much risk in the market. The dollar was marginally higher against the emerging currencies, steadied at 7.01 Chinese yuan. Against the basket of currencies, dollar was flat at 99.02. Meanwhile, manufacturing data in Asia painted a bleak picture. Factory activity in Japan and South Korea posted the biggest contractions in about a decade, and the Bank of Japan's Tankan corporate survey showed manufacturers turned pessimistic for the first time in 7 years. Surveys due out later, which we did go on to get those, include Germany and the U.S., are expected to similarly little for investors' confidence, with private employment data is likely to show a sharp drop in payrolls. The virus has now killed more than 42,000 people and infected more than 851,000 in 205 countries. Goldman Sachs on Tuesday said it now forecasts a real GDP sequential decade decline of 34% in the United States. This is quarter on an annualized basis compared with an earlier estimate of a 24% drop. So certainly it's continued to drop even further. Or at least the outlook. And the U.S. aims to lease space in the emergency oil stockpile after buying plan is canceled. The Trump administration plans to lease out space for the energy companies to store oil in the nation's strategic petroleum reserve after previous effort to buy millions of barrels for the emergency stockpile was canceled over a lack of funding, according to two people briefed on the matter. The plan could help the U.S. Deal with the growing glut of crude oil that is overwhelming the commercial storage tanks and sending world energy prices deeper into a tailspin with the coronavirus pandemic. Trump ordered the DOE on March 13th to fill the reserve to the top to help oil producers suffering from the global oil price drop. But Congress did not approve funds for the buys, forcing the Energy Department last week to cancel the proposal. The revised plan would help traders and others as they try to ride out the precipitous drop in the price of oil by storing crude for sale later once the crisis is over. We appreciate any action the administration has taken to alleviate the oversupply flow in the market and allow U.S. independent producers to continue to operate, said Ann Bradbury. We encourage Congress to work with the DOE to ensure they have the resources needed for the SPR flexibilities and address the oversupply issues we are facing. And oil skids as oversupplies fear pile up with U.S. inventories growth. Global crude oil prices slid further on Wednesday, following the biggest ever quarterly and monthly losses. As bigger than expected rise in U.S. inventories and a widening rift with OPEC heightened oil supply fears. Oil prices are near the lowest since 2002, and the global coronavirus crisis has brought up worldwide economic slowdown and slashed oil demand. Crude futures ended the quarter down nearly 70% after record losses in March. Crude inventories rose by 10.5 million barrels, far exceeding the forecast for a 4 million barrel buildup. The market sentiment remains bleak as there's no clarity on how the pandemic will continue, said Hiroyuki Kikukawa. Nearly 800,000 people have been infected by the worldwide. More than 38,000 have died. Obviously, we saw that number even higher in the other story. With that, we'll go on and move into the analysis. Okay, take a look at the euro. The euro paired back on Tuesday, finishing with a hammer bottom. You can see that. Resistance will be 10.95 with support will be 9.95 followed by 9.54. Well, you can see here we're just about ready to on the thrust of tagging 9.54. So we've got 9.54 for support. And for resistance, well, you can see that clearly with this fall. Resistance is going to be right here, 10.20, right there. Matter of fact, we may just give it just a touch above that, which is going to be at 10.26. So resistance at 10.26 here for the euro. And onto the cable. Cable posted a hanging man in Tuesday's session, and you can clearly see that right there. Resistance is going to be 25.28. I thought we might be able to, in case we blow some stops up here. Support will be 23.32, followed by 22.22. Well, we've got 23.32, and we're just above that, just slightly. We'll actually go on right here, see right there, tag it for 23.15. But we will go on and keep the upside here. Let's see, 23. $23.22. In that very, very tight range, this market, after the whirlwind we've had over the last couple of weeks, Certainly, this is the quietest session we've experienced so far. On the upside, if they are to go in and test a little bit higher, we'll still stick with the 25.28. And let's go on and move on now to the Aussie. So the Aussie closed lower in a very tight range. Support is now going to be 60.68. Actually, I meant to put 60.63. You can see this key level. One of the guys was asking about where support was yesterday in the session. This was yesterday in the latter part of the U.S. session, and said, well, here it is right there. If we get, close below 60.63, it's certainly going to go on and trigger that. So meant to put here that the support is going to be 60.63 with resistance. We did put 62.38. Certainly we're under a little bit of pressure here. We would actually go with the close right there, which right there is going to be 61.68. So let's go here. And 60.63 will hold for the support. That's essentially, we've already tagged it and we held it. We could probably push below it, but this is going to be really a trigger if we close below 60.63, opens the door then to on a straight at sell mode. You can see here the Kiwi is fairly similar to the, at least the structural setup as the Aussie. Kiwi closed lower for a second consecutive day. Support is going to be 59.13, followed by 58.53. You can see we're already pressing against here. We have the list as 59.14. And beyond that be 58.53. So what we'll do is we'll go in and mark just the same thing with the Aussie, mark this as a trigger, but where would the downside be looking for immediately as far as where would immediately look to push? So we'll go with the 59.14 that we have marked here. There we go, 58.53 on that break. On the upside, it's going to be right here. You can see that. You see this high here is confluencing here with the low here. So we'll go right there with 59.89. And let's go into the dollar CAD. So the dollar CAD spiked above 43. That was yesterday. Before closing below 41. Now we've turned around and flipped back things back up again. Resistance is going to be 42 even. Look where we're at, right at 42. And support 39.58. Well, we're probably going to have to adjust that because we've certainly popped right back up here. Let's go and take a look at a 2-hour chart to see if we can see something a bit more definitive. right there. Right there. That's going to be support if we break that. 41.00, basically 41.01. The trigger probably would be right there. So that needs to hold, which is 41.16. So the dollar peso bolted above 24.50 before pairing back to 23.81. Resistance is going to be 24.15 with support at 23.25. So 24.15 on the upside. And let's move on to the dollar yen. So the dollar yen short covered towards the resistance, which was 8.96. You can see that on Tuesday. That's what we were looking for on Tuesday. Resistance at 8.96. We did come up a little bit short, but I mean, like I said, they were short covering towards that 8.96 before turning around and sliding right back down the hill. Before sliding back sub 778. Resistance now will be 850. If we can push back up in here, 850. With support is going to be as low as 693. So let's go and adjust that. So the dollar index rallied to 100. Actually came about like 2 pips or 2 ticks, I think, short. But anyway, dollar index rallied to 100 before sliding back slightly below 99 even. Resistance will be 99.72 with support at 98.44. So 99.72. Currently the high is 99.66. So pretty close. Well, look at the Kiwi Yen, and that has continued to weaken. You see here we had the 2 back-to-back hanging men, and then from there we've continued to work a little bit lower. We did get a quick little pop up here, but we didn't close. It would have been key if we would have closed above this line right there where the closes and open are. But we didn't, and we continue to follow through on this setup with these hanging men. Resistance at this point is going to be right there with the close and the open right here. It's going to be 64.79. support, we're seeing some good touches right in here. So we're really right at support. We'll allow it to push a little bit lower, maybe to test some stops, which comes with this close and that low there, and that'll be 63.24. Moving on to the Euro Yen. Oh, this has really come off quite a bit. You know, after this run here, and now look, just quite the fall. Now, once again, you can see here, we had a hanging man there. And that hanging man was confluencing right here at a pretty good, decent resistance level. Look at all the touches here. So that was a pretty good setup. I mean, I don't trade the Euro Yen. I mean, I've in the past a few times, but I mean, on a regular basis, no, I don't trade it. But this was a pretty nice setup here. A hanging man right at key resistance. And, you know, we never know exactly how a market's going to, where we can move to, but what we can do is try and put the percentages in our favor. So we already had a pretty good strong run up. Then you get a hanging man, and that hanging man just happens to coincide right at key resistance, and we closed right on that key resistance. So risk was probably, you know, well defined, and certainly we saw this market come off quite a bit and follow through. Support at this point, we're going to just go with the touches here. You can see here coming right across here. It's actually, we're just about there anyway, which is going to be 1771. Three minutes away from UK manufacturing data. And resistance, it's going to be right here, these touches. You see there? Right there. We'll even give it just a little bit better there, right on that close. So it's going to be 1854. 1854. Let's go and move on to the Euro odd. This has been trading rather quietly in a rather tight range, although all things being relative, because it looks like it's a tight range, but after this monster run up, you're still trading in what? That's 81, 82, 70. Yeah, that's still, you know, over 200 pips. So it looks like it's quiet, but it's not as quiet. Once again, it's all relative. Resistance is going to be right here, right there, the close there. This lower, that's going to be our resistance. I guess you really should go with the touches here. That's all these touches coming across. So, yeah, the resistance is going to be right there, which is going to be 82.49. And for support, we're going to go with this low right here, which is confluencing with this one right there. You see there? So it's going to be 77.20. With that, we're going to move into the Euro Kiwi. You can see right there, 80.60, and we're right there, just right about right there. So we're 80.60. I meant to say 85.60. Actually, that's 85.97. Golly, I was way off. 85.97. And then for support, all those touches coming across here, it's going to be 84.99. 84.99. And we finally started to pare back a little bit in the Aussie. And you see how we've been hanging around here? Actually, Gravestone Doji, Hanging Man, not as clean, but basically another Hanging Man, not as clean as this one. Same thing here. I mean, it's not a Hanging Man, but the, excuse me, the range is so tight. And then finally we close lower, and then you see the follow through. So certainly the resistance is just going to be the high right there for the day. That right there, 66.19. We've gone and seen the follow through on this, but I don't think the real support's going to come in towards the 64.26. There's going to be a little bit right there, right here, and we'll go with that for 64.65. Let's go move on to the guppy. This is traded in a relatively tight range after popping back after this massive hemorrhage. Look at that, from basically almost 145 all the way down. I mean, you know, you're looking at 1,100 pips. So we have rallied back, but we kind of got stuck in the mud here. Resistance is going to be right there on this close. See right there? That's going to be resistance, which is going to be 33.82. And on the support, we'll just go right here. You see the touch coming across here, the close, open, low, right there, 32.10. We did get a little bit of oil news here, and it's affecting. We're seeing a little bit of an offer on the oil. Russia's not going to be producing any more for the oil, but they're also not going to be. They're not holding talks with Saudi at this time. So that's where we stand. Let's go move on to sterling odd. Kind of popping up a little bit here. Let's see if we can see something on a 2-hour chart, make it a little bit clearer. Right there, you see there? Low, high, right there. 0424. That's going to be resistance 0424. And support, obviously, they've taken out these stops here, so a dip back to support is going to be right there. 0270. And that's going to wrap up the analysis here for FX. And we've seen the euro continue to stay a bit under pressure. We did have European PMIs. Taking a quick look here in indices. We saw that rally back. I told you that we got that rally back up to the 50% after we came into some key support here. If you look on here, I think it was a 2 hour, I believe it was. Yeah, look at that, 24.76. I mean, basically right to the doggone nose. And then we saw a nice little pop as we started to move higher off of that, which took us all the way up here to the 50%. I thought we might make it up to the VWAP. But we did go and pair back, but we paired back much further. And boy, did we really come apart too, because as I told you, I got short and the market's really hanging there. So I thought, okay, we may only dip to about maybe 03 and we'll kind of hold or whatever. We had a level there around here anyway. Then we just kept on falling and falling and falling. We saw a little bit of a bounce and then it just resumed the downtrend. And we've really kept things under pressure right now. So this is quite a pair back, especially after we obviously had the month end, which created that stir to the upside. My thoughts were, well, once we get past month end, we'll probably rotate lower. And we did, but I was looking for lower, but I thought it would be rather slowly, like we kind of dilly-dally around here, and then we come back, we kind of hang around here, we work a little bit lower, we hang around here, and just, this is really just giving up all of it back in very fast order. Certainly here with the NASDAQ also pressing these lows. Just a quick overview with the crude oil market. And you can see when we came on earlier, remember we had already come up to this 2073, kind of pairing back, but we've seen this market weaken further on that news. Russia, they're not pumping any more oil, but at the same token, they're not having talks either at this time with Saudi Arabia. So it's really kept the pressure up, on crude actually to the downside, obviously. Taking a look at the gold market, you can see here on a 2 hour chart, we did get a hammer bottom, and that hammer bottom has allowed some follow through on the upside. We'll just take a quick look at that before we zip out of here. So once again, that hammer bottom on the 2 hour that you see, we can take a look at it here, and you can see that pop that we've seen. And you can see here that we held VWAP here, the blue line, and we've really scooted on up to 1612. We're pairing back a bit here, a little bit of support here. And you can see here, NAS continues to be under pressure. They did rally back up. Thought they might even make it up to VWAP. They did, and they finally succumbed, although this was a good area right here, this level, which equated at the same time when SPOOs were at 25.11, which was a 50%, 25.11 and a half. But we've paired back, so we're kind of languishing near these lows. Gold kind of holding up okay. And that's going to be it. That's all we have. Thanks for joining us here on the European Crossover webinar. And we'll see you in the chat room. And good luck trading today.